Welcome to our channel. In today's video, we will explore the importance of inflation-proof assets and how they can safeguard your wealth in 2026. As inflation continues to impact economies worldwide, it's essential to understand the strategies to protect your financial future. Don't forget to subscribe for more insightful content like this. Number 5. Real estate investment. Real estate investment is a well-known method of inflation protection. Real estate assets, such as residential and commercial properties, often appreciate in value over time, particularly during periods of inflation. This appreciation acts as a buffer against the erosion of purchasing power caused by rising prices. Properties can generate rental income, which typically increases in line with inflation, further strengthening their role as an inflation hedge. When inflation drives up costs, rents tend to rise, thus benefiting property owners. Real estate also offers diversification benefits, providing stability in portfolios that include stocks or bonds. Additionally, real estate investments can be leveraged, allowing investors to use borrowed funds to acquire properties and increase their potential return on investment. As demand for housing and commercial space grows, real estate tends to maintain or grow in value, making it a strong asset to hold during uncertain economic times. The physical nature of real estate also makes it less susceptible to volatility compared to more liquid assets, like stocks. Investors looking to protect their wealth against inflation can invest in real estate directly or through real estate investment trusts, REITs, which offer liquidity while still benefiting from real estate's inflation-resilient properties. Number 4. Precious metals. Precious metals, such as gold and silver, are widely regarded as a safe haven during times of inflation. Historically, these metals have preserved their value when currencies lose purchasing power. Gold, in particular, is viewed as a store of value and a hedge against inflation because its supply is limited, making it resistant to currency devaluation. During inflationary periods, central banks often print more money, causing the value of fiat currencies to fall. However, gold's value tends to rise as investors seek stable assets to protect their wealth. Similarly, silver shares many of the same inflation-proof qualities, though it is more volatile than gold. Both metals have intrinsic value due to their rarity and industrial applications, which further supports their role as protective assets. In addition to their use as a store of value, precious metals also serve as a means of diversifying an investment portfolio. Investing in physical gold and silver, exchange-traded funds, ETFs, or mining stocks allows investors to gain exposure to these assets without owning the metals themselves. As inflation continues to increase, demand for precious metals grows, reinforcing their reputation as effective safeguards for wealth during inflationary times. Number 3. Inflation-linked bonds. Inflation-linked bonds, also known as Treasury Inflation-Protected Securities, TIPS in the U.S., are specifically designed to protect investors from inflation. These bonds offer a fixed interest rate plus an adjustment based on the Consumer Price Index, CPI, which measures inflation. As inflation rises, the principal value of the bond increases, ensuring that the bondholder's purchasing power is preserved. The interest payments are also adjusted with inflation, providing a consistent income stream that keeps pace with rising prices. This dual protection, adjustments to both principal and interest, makes inflation-linked bonds an attractive option for investors seeking a reliable hedge against inflation. Moreover, these bonds are backed by the government, offering a high level of safety and stability. Inflation-linked bonds are especially useful in periods of high inflation or economic uncertainty, as they provide predictable returns and mitigate the risks associated with fluctuating prices. They can be held directly, or investors can purchase funds that pool various inflation-linked bonds for greater diversification. While they may not offer the same high returns as stocks or other more volatile investments, they provide peace of mind during inflationary periods and ensure that the value of investments is not eroded by rising prices. Number 2. Diversified commodities. Investing in diversified commodities is another effective strategy for protecting wealth against inflation. Commodities such as oil, gold, agricultural products, and natural resources tend to rise in value when inflation drives up costs. The prices of these physical assets often correlate directly with rising demand and supply constraints, making them a natural hedge against inflation. For example, as the cost of energy rises, the price of oil and natural gas typically increases, reflecting the higher costs of production. Similarly, food and agricultural commodities often experience price increases during periods of inflation, as higher input costs for farming and transportation are passed on to consumers. Diversifying across different commodities further reduces risk, as not all commodities respond to inflation in the same way. By investing in a basket of commodities, investors can spread risk across multiple sectors of the economy, ensuring that they are protected even if one particular sector experiences volatility. Commodity investments can be accessed directly through futures contracts or exchange-traded funds, ETFs, or indirectly via stocks of commodity-producing companies. These investments provide a safeguard against the rising costs of goods and services, ensuring that investors' wealth is protected in an inflationary environment. Number 1. Stocks in inflation-resilient sectors. Investing in stocks from inflation-resilient sectors is a highly strategic way to safeguard wealth during inflationary periods. Certain industries, such as utilities, healthcare, and consumer staples, are less sensitive to inflation due to the constant demand for their products and services. For example, utilities like electricity and water are essential for daily life, and consumers will continue to use them regardless of price increases. Healthcare also remains in demand, as people continue to require medical services and medications even in inflationary environments. Similarly, consumer staples, such as food and household products, are necessary for daily living, meaning companies in these sectors can pass increased costs onto consumers without significant reductions in demand. These industries tend to provide stable earnings, making them attractive for investors seeking reliable returns during periods of inflation. Additionally, companies in these sectors often have the ability to raise prices without significantly impacting sales, ensuring that their profitability remains intact. By focusing on stocks from these inflation-resilient sectors, investors can build a portfolio that offers steady growth and stability, helping to protect their wealth from the negative effects of inflation. This approach allows for growth potential while minimizing the risk of inflation eroding the value of investments. Thank you for watching this video. We hope you now have a better understanding of inflation-proof assets and their role in wealth protection. If you found this information helpful, please subscribe to our channel for more content on securing your financial future.